Hello and welcome to Trading with Rob. This is the daily markup for the DAX on Wednesday the 24th of September 2025. Today we had a bear climax on the open, a quick reversal and a trading range that lasted several hours, followed by a bull breakout, wedge top and a pullback into the close. Starting, we have yesterday's high marked at the top in yellow, yesterday's open in solid green, yesterday's close in solid red, and yesterday's low as solid yellow. I find these to be important levels for the day and like to include them on every chart. I also have the open of the day marked as a dashed green line and the close of the day as the dashed red line. Also have the 20 period moving EMA as the solid blue line and the 20 period 60-minute EMA as the dashed blue line. Sorry, that was the 20 period 5-minute moving average as the solid blue line and the 20 period 60-minute moving average as the dashed blue line. To start the day, we had a gap down of about 35 points, and on the open we had a consecutive strong bear bars, a series of strong bear bars, which would normally be considered to be a strong 3-bar bear microchannel setup, but and with a high likelihood of further downward prices. But on the open, even the strongest moves have a higher likelihood of reversing and failing. So generally it is best not to trade within the first 30 to 60 minutes of the day, or if you are trading them, to trade small and pay attention to the pre-market. This, although dipped below, was testing the EMAs and the yesterday's low, so there was significant resistance levels at this point. The market then reversed up, big down, big up, leads to big confusion, trading range price action, and after a wedge top, lower high, double top with the open of the day, we then went into a trading range which lasted several hours through the day, with yesterday's low, the 60-minute EMA, acting as support for most of that time. When trading this kind of range, want to buy low, sell high and scalp, and fade moves to the trend extremes, the top third being the sell zone and the bottom third being the buy zone, and prioritizing entering on double tops and double bottoms and looking to fade the extreme moves to the ranges, being careful of second leg traps. Eventually we had another series of strong consecutive bull bars, breaking above significant levels of the open of the day, the EMAs, yesterday's close and open. And this again is a strong 3-bar bull micro channel with follow through, so highly likely to lead to higher prices. There was a 2-legged pullback to the EMA and yesterday's close, strong support now, and then we can look to generate some measured move targets, looking at the height of the first leg and projecting up from a second leg. We went to a higher high double top, higher low double bottom. It's essentially a spike and channel bull trend, and we formed a wedge top, a large wedge top at yesterday's high and the measured move target, which finished in a series of strong bull bars late in the bull leg. This is climactic behavior late in the leg and is likely to be an exhaustion gap. This led to a reversal, a pullback, which closed the exhaustion gap and tested the 5-minute EMA and was basically going into the close after another higher low double bottom. So to look at the stop, the best stop entries for the day, I think after the initial strong bear bars down, because there has been a second leg which has fallen below the first leg, even if it isn't a measured move and isn't fully symmetrical, because it's on the opening of the day, looking for a reversal. It's essentially a two-leg move, one pullback, two, buying above the strong bull reversal bar and above its follow through is reasonable, targeting the open of the day, then forming a wedge top going into the trading range, hopefully targeting maybe a bit lower in the range towards the lows of the day, maybe a second move on the initial move down on the open. But once the trading range becomes a bit more obvious, then buying low above strong bull bars and selling high above strong bear bars is the strategy, and that continues. The problem with buying above these initial bull bars is that they're high in the trading range, hasn't quite broken out yet. By the time the market has broken out, it is so far away from the trading range that it's big risk to put a trade on at this point. So really we're looking for a pullback, which we obviously get from the two-leg pullback to the 5-minute EMA, buying above strong bull bar here, and then after another pullback testing the 5-minute EMA again above relatively strong bull bar and this bull bar here. And then finally, once we get up to climactic end of the trend at the yesterday's high and the measured move target, it's a cluster of resistance more likely to lead to a reversal. So shorting below a strong bull bar is reasonable. So overall, this is my markup for the 24th of September 2025, and I hope you found this useful. Thank you for watching.